Hello everybody, I'm Aaron Norris. It's June 22nd and this is the Norris Group's Real Estate Headline Roundup in 2. Actually, it might be a little bit more than 2 minutes because there's a lot of news this week. First up with the numbers, the National Association of Home Builders reported a 1-point increase in builder confidence this month. The Census Bureau says in 2010, shared housing increased 11.4% from 2007. That means 18.7% of all households are now made up of shared housing. The Census Bureau also said data shows the median household net worth dropped 35% from 2005 to 2010. Housing starts on single-family homes jumped up 3.2% last month, and LPS reports a 1.1 increase in the delinquency for the second month in a row after having been on the decline for 9 months. FHFA says home prices nationwide are up 0.8% in April for the third month in a row, although at the same time home sales dipped 1.5%. Capital Economics expects home prices to increase 2% this year and 5% by 2013. Unemployment claims are still high despite dropping by 2,000 last week, and mortgage rates are also at a new record low at 3.66%. The California Association of Realtors says that May posted the third straight month of price gains, citing low interest rates, return of move-up buyers, decreased inventory, and strong coastal sales. Closed sales of existing homes were up 3.4%. Sales increased 21.5% since a year ago. The median price increased 1% to $312,110. Many of those gains are attributed to increased sales in coastal regions, including San Francisco, who have a very short inventory. And inventory is down statewide once again. It's now at 3.5 months. FHA has canceled the rule that required homebuyers to settle credit disputes of the amount of $1,000 or more before they were allowed to get financing. The rule had gone into effect in April. John Burns Real Estate Consulting surveyed builders that said that 60% of their sales would be delayed or lost. The rule was dropped over fears that it would give more power to Fannie and Freddie. You are going to have to read this one to believe it, but San Bernardino is using eminent domain to possibly seize loans for underwater homeowners. Since last year, the County of San Bernardino has been in talks with mortgage resolution partners who are planning to use eminent domain to take ownership of loans from homeowners who are underwater but current. They hope that this may help them to reduce loan payments and obtain mortgage notes using the condemnation proceedings process. Once the local government agency seizes the loans, the homeowners would likely receive new or renegotiated loans that are priced based on their current property values. There's way too much of this story to explain, so you'll kind of have to read it, and you're going to want to check in on our radio show the next couple weeks because we're going to follow up with this one. The home of the notorious Octomom Nadya Suleman recently went into foreclosure yesterday after several delayed foreclosure auctions in the last 3 months. The now bank-owned REO property took 6 months to foreclose on, which is actually a lot faster than usual in California. It was a private party who says that he was unable to make his mortgage payments because Nadya did not make hers, and he is glad to be done with Nadya. Banks and servicers might have to pay upwards of $125,000 to homeowners most hurt by the foreclosure handlings of the past few years. Loan servicers may also be asked to fix the improper foreclosure by adjusting credit reports, modifying loans, or canceling the foreclosure entirely. Regulators sent a mailer of 4.4 million borrowers, of which only 4.4% responded. That's not very good. 12,000 have gone through the review process, so those that lost their homes in 2009 and 2010 are being given an extended date. The due date is September 30th to file for a case review at independentforeclosurereview.com. There are so many more headlines on our blog at thenorrisgroup.com/blog. Up on the radio show this week, we've got Rich Sharga, again with Carrington Mortgage Holdings. Very interesting conversation on bulk buying, notes, and houses. October 19th, please mark your calendar. This is going to be our 5th annual I Survived Real Estate event, and you're not going to want to miss it. Have you checked out our new loan programs? You're going to want to. Go to thenorrisgroup.com to find out more about all 5 of our hard money lending programs. And if you're looking to make 9%, please check out TNGTrustDeeds.com and find out how the Norris Group might be able to help you make a passive and secured return. That's it for this week. Have a wonderful weekend, and we'll see you next week.